me now bring on board Pratik Agrawal, Chief Investment Officer with ASK Investment Managers. Pratik, it's a story of local versus global. Globally, things are looking strong and upbeat, but globally, things are looking slightly sticky, be it numbers or be it liquidity.
Yes, but I think it's local issues which are taking a larger part of the mind at this point in time. Things like GAR-induced uncertainty is causing flows to stay away from India. That is at least our sense. But all said and done, valuations at this point in time is significantly lower than average given the momentum that we see across the globe. If some of these issues are taken care of, we could see a bump up in our markets as well.
Right. Pratik, what do you make of Q4 numbers so far? If I look at large cap companies which have come out with numbers, the missing component is revenue growth and margins, at least for Q4 for large corporates. They are certainly coming under pressure.
So let's look at what was expectations versus what has been delivered. Yes, corporate India earnings have been kind of flattish, but expectations were that way only. So overall, at this point in time, we would want to believe that hits and misses have been kind of equal.
Pratik, your thoughts on the banking bill which has now got the cabinet nod, and more importantly, shareholding norms and the new SEBI mandate which has come out, and how effective would that be on some of the market participants?
If you're talking of 26% voting rights, maybe this was something which was holding up a bit in terms of new bank licenses. It doesn't impact what is listed in any great manner. Maybe there are a few banks which, as per RBI norms, have to dilute promoter shareholding over a period of time. Those kind of banks may now find it easier to sell as a block to somebody, because the new guy will now have 26% voting rights. So versus earlier when people just had 5% and every strategic buyer positioned themselves as a 5% stake in various banks. Now it is possible to go up to 26% with voting rights. So except for that part, I really don't believe that it will have any significant impact on anything that is listed in the markets.
Pratik, but now that the voting right in private banks, it has been increased from 10% to 26%, do you see a lot of M&A stroke stake sale activity in small and mid-cap private banks, maybe something like a Dhanlakshmi Bank, which is in dire need of capital, Karur Vysya Bank, Federal Bank, ING Bank?
Yeah, exactly. So that is what I was trying to say. These kind of banks and maybe a few more. So most of these banks would have very little in terms of defined promoter holding. So anybody who is coming in fresh will do so either as a fresh issuance of capital on a preferential allotment basis, or there are certain banks where promoter stakes are high, the new private sector banks, where they need to be brought down as per RBI rules in a defined period of time. So those kind of banks were diluting gradually over a period of time. Now they can probably look at a strategic sale as well. So for that narrow part of the market, it may just help. We need to be conscious of the substance on the ground. Most of these extremely small banks, frankly, may not have too many takers. The business on the ground should be of a significant size for it to be of any interest to a new entrant. Plus the fact that the cultural mix has to be seen. The earlier experiments in terms of MNCs buying smaller, old private sector bank kind of entities have not been too great.
Pratik, what's been your portfolio strategy of late? I remember this conversation last time we had on this forum, and your portfolio strategy about a month ago was sell high beta, sell global commodities, buy IT, and buy the defensives.
Not bad, you remember quite a lot.
It's my job to do that,
But,
Pratik.
just to put, yeah, okay. Our point is that we continue to be defensive. While we understand that valuations are now cheap, we don't see much in the environment that will cause stuff or the areas that we are not focusing on to do well in the short term. So at best, since valuations in that part of the market are down, they may sustain those valuations, but volatility in that path would kind of stay high given the volatility in the environment itself. So we would want to stay with a defensive, low beta, strong balance sheet, annuity kind of businesses for some more time.
Okay, Pratik, good to have you on the show. Thanks for taking time out as always.